Shelton Coats here, founder of the Coats Group at the Coats Company Realtors. Today we are going to be doing an Ask the Broker. We have with us the man, the myth, the legend, the captain of our office out of Coral Gables, Carlos Villanueva. Hey, Carlos.
Hey there, Shelton. Thanks for having me.
So, Carlos, let's start off with your background in real estate.
Yeah, so actually I've been in the real estate business now for 24 years. It'll be in May, so I'm just trying it out to see if I like it. So far, so good. And I started my career with one of the big brands, with Realogy, Coldwell Banker brand, and worked with them for a number of years. Was a top producer, was Rookie of the Year, top 1%, and then ended up transitioning into leadership and management. And from there, kind of grew in the ranks. Then decided to start my own firm. Built that little company up, sold it to Prudential, which is now Berkshire Hathaway, and then from there I worked for them for about 5 years, ran a top operation for them, and then now been with the Coats Company for 10 years, running one of their top offices. So it's been a great career. Certainly enjoyed it.
Okay, great. And so there's a little bit of uncertainty out there in the world, understandably, because of the coronavirus and COVID-19. And so while we're still listing closing deals, I want to know what your outlook is on the current market and what buyers and sellers should be doing right now.
So yeah, certainly the times that we're living in right now are unprecedented. What has occurred in the last 30 to 45 days has not happened for almost a century in this country. So certainly these are kind of uncharted waters in modern times. However, that being said, the best advice that I can actually give everyone, so we'll kind of start just from a general perspective, then drill it down to real estate, is just to remain calm and put things in perspective. When I look at the real estate market today, certainly there's some shifts that are happening. We're certainly in a shifting market. We've seen, from sellers because of fears of actually having people come through their homes, take their houses off the market temporarily. You've seen buyers who've actually kind of pulled back as well because of fears of showing. But what's interesting about that is that it's actually created a new subset of a market. And that subset of the market is actually very motivated sellers and very motivated buyers that are actually now converging together to be able to transact real estate. The reason for the motivation is, if you're actually on the market today to sell, you're a real seller. And if you're actually on the market today as a buyer, you're actually a real buyer. Buyers are trying to take advantage of very low rates and attractive rates right now. They're historic lows. I mean, basically for a fixed rate mortgage, at around 3.25%, 3.3%. So very, very low cost of capital. And if you actually still, have a job, which the majority of the population certainly does, there's no question about that. Even though we've seen unemployment raise, I think it's like 26 million as of yesterday, unemployment filings. There's still a significant portion of the population that remains employed and is able to actually buy property. So the first tip I would give, again, is just to remain calm and put things in perspective. There still is a market out there. Buyers need to buy and sellers still need to sell.
Yeah, and I think it's important to highlight that we here at the Coats Company and the Coats Group, we've been leading on that technology front for a very long time. Most of our platforms have always been cloud-based, digital. And so we've been doing virtual tours for a very long time. And so we really were preparing for such a shift to begin with because you and other Coats leaders were very heavy on technology. And I think that's what attracted a lot of us. And that's what helped us to serve our clients better. And when we made that shift and we had new listings come on during this quarantine season, we had an abundance of resources to allow buyers to view houses virtually, sellers to sign contracts and offers digitally. And so we've always had this technology, and I think it's great that we've led the way into this. And so all of our clients are very confident in our ability to still serve them throughout this.
No, there's no question about that. And you guys have done a great job at the Coats Group with being adaptable and really being able to find the ways to do business. So I salute you on that. You've done a great and phenomenal job with that. And certainly, the Coats Company, as part of our pedigree, we have survived depressions, recessions, world wars, conflicts, numerous administrations and regimes throughout the world, and we're still here since 1926. And it's because of that resilience and that spirit to adapt to situations. And certainly today, this is a time for adaptation and to be able to work through the challenges of staying at home and having to communicate virtually using technologies like this, like Zoom and GoToMeetings and conference calls and e-signing and so on and so forth. So certainly critical. One point I will share with you as far as going back to the market and also adaptability is that there's the old Persian saying, "This too shall pass," right? So my belief system is, and my background's in economics and finance. So when I take a look at just the trends prior to this quarantining effect, what we actually saw was a rising market here in South Florida. And I believe that this pause, because remember, this is a forced recession. There's no technical aspect of this recession that's either led by the financial markets or by housing or by really anything that's political. It's actually really being done for public safety and for the well-being of our society and that of the globe as well, as far as the citizens of the world. So, that being said, yes, there will be heartache and there is pain. But at the same token, it's something that's temporary. And as we go through this and we heal and we come better and stronger, I believe that we're going to recover very, very strongly. And again, because all of the fundamentals were there prior, I believe they're actually still there. Again, this is a temporary pause. And then once the economy reboots again and starts restarting, you'll see that kind of gradual recovery. Right now, a lot of analysts are talking about the U-shaped recovery, right? They were talking about the V-shape, but I believe actually it's going to be more of a U-shape. When you take a look at it, it's going to take a little bit of time to recover, but it certainly will. And I believe real estate is going to be an exceptionally good asset class to invest in. It's something that people can see. It's tangible. They can manage it. Where some of the volatility in the stock market has been nauseating for so many right now. So shifting to real estate, I see as a big deal. Not to mention, by the way, because we are in a warmer climate and you can actually run and go outside and things like that. And people who are kind of cooped up in colder climates are certainly looking at us here with the palm trees and the ocean breeze and everything else, saying maybe I should be switching to a healthier, nicer environment. And certainly South Florida affords that for so many.
Yes, and even right now, the chief economist over at the National Association of Realtors just put out a statement saying even though we're expecting more temporary pauses in the market that we are seeing right now, house prices are still forecasted to rise. And the pricing structure of the housing market right now is very strong. We're still seeing home prices and home values appreciate even through the rest of the year and the rest of the quarters that we're seeing. Speaking on that, how do you see the market moving forward into quarter two and quarter three?
So, when you take a look at history, the last several recessions, and I'll just say over the last 50 years, there's actually only been two incidences where home prices and valuations have actually gone down. And that was during the housing crisis of 2008, 2009, because that recession was led by housing. And then the other one was early 1990s because of the S&L crisis, and that was also led by housing and mortgage lending. Prior to that, and actually even when you take again looking at the last 50 years, there has actually not been a single recession where housing prices have actually gone down, with the exception of the ones that were led by housing. So this was not led by housing at all. Again, this was just a pause that was forced because of public safety. So as I look into the future quarters, because of low cost of capital, because of pent-up demand, because of limited supply and inventory, supply and demand, the forces, which are economics 101, are certainly going to yield price appreciation in properties and actually holding values as well. Now, that said, let me give the caveat to the sellers who may be listening to this. If you're overpriced, you're overpriced. Okay, so the market's not going to be forgiving for someone who has a valuation, let's say a real valuation of 600 and you're asking 7 or 650, it's still worth 6. So, being realistic with your pricing and how properties are positioned is still essential. So those fundamentals are still in place. However, when I look at the forecast for the future, it looks very, very positive. And the same way that unemployment numbers have gone up, I believe we're going to see a rapid descent in unemployment numbers over the next 12 to 18 months, which will be very favorable. They just approved additional stimulus yesterday for small businesses. The PPP, Paycheck Protection Program, was also just enhanced. So that's going to help with some stability during this time. And again, I believe it's temporary because we're not built to do this way. This is not how, America is a capitalist country. And not just America, throughout the world, trade needs to occur for things to move forward. So I believe that as that resumes, we're going to see a very robust and very healthy housing market.
Great, positive insights. And I think it's great to stress that yes, even though we're still listing and everything, pricing is key, and pricing your home to sell is really what sellers should be focusing on, and buyers, should really take advantages of these historically low rates. And I think that moving forward, we'll continue to complete deals. We'll continue to help people, as I like to say, helping you find home is what we do. And so we'll help you find that place to call home. Thank you very much, Carlos. It was great speaking to you. Any final thoughts for the folks?
No, it's my pleasure. Just, when you're looking for your real estate, needs to have them taken care of, be wise and work with Shelton at Kais and the Coats Group. And certainly appreciate you, Shelton, and all your efforts. You're doing a great job. And again, for our customers out there, remain calm. There's still a great housing market out there. And again, we're very confident about it. Looking forward to servicing you and taking care of your real estate needs.
Thank you, Carlos.
Thank you, Shelton.